Hey, how's it going? It's Forex Jim here again, and today I want to talk to you about Forex trading for beginners. I want to basically share some tips and advice. If you're just starting out in Forex and you want to know what to do to become a profitable trader, then hopefully I can help you out. Now, these tips are really going to help you because when it comes to anything in life, especially when it comes to making money. And Forex trading is one way, but playing poker is another way, which has very many similarities to Forex. Um, Owning websites and that sort of thing is another way. What often happens with these things is a lot of people try, and let's say we have, I don't know, let's just say we have 1,000 people who try, okay? For every 1,000 who try, probably I would say at least 500 or more, at least half will give up in no time. And if you look at the people who eventually trade for a living out of those 1,000 who start, and I would say it's 10 or less. It's going to be 1% or less. And the reason for that is because most people are just not serious enough about it to apply themselves, and they're actually scared. They still think that they're going to have to work for their boss for the rest of their lives or something like that. They're afraid of what the system has basically told them to do. The system has told them to stay in a safe and secure job. When we should all know by now in this due to the recent economic downturn that there is no such thing as a safe and secure job. You can be fired just like that, made redundant just like that. So let me tell you, I'm going to share some good tips with you, but if you want to go full time within a year rather than 5 years, then it's very important that you take a very serious approach to Forex and give it as much attention as you would your workload at work. Because it's easy in your spare time to just not give something that much attention, but if you do, it will reap rewards for you. So we're talking about Forex trading for beginners. Now, what I would recommend you to do is to learn as much as possible you can about this subject. It's not difficult, but there are a lot of concepts, and a lot of them are quite basic. And then of course there are advanced ones, but it's important to learn as much as possible. I do recommend getting some books, and here are a few books that I definitely recommend. One of them is called Reminiscences of a Stock Operator. Okay, that's kind of related to the stock market, but it teaches you a lot about trading. It's a very old book. It was written during the Great Depression, but even today, it's still one of the best books on trading that you can find. So that's Reminiscences of a Stock Operator, and I think it's written by Edwin Lefebvre. So check it out. There's a couple of other really good books, Market Wizards and The New Market Wizards, both by Jack D. Schwager. So check out those books. They're really good. They're easy to read. They're a question and answer interview format with some of the most successful traders, people like Jim Rogers. So I think Warren Buffett also did an interview in there, possibly. But have a look at those. They're really good. Other than that, what you can, yeah, that's the main thing. To start to gain an education. Try and resist these Forex robot scams. What a robot is, you might have seen a robot, a bot, and an expert advisor. They're all the same thing. They are a model that's been invented by somebody else, and this model plugs into your MetaTrader 4. By the way, MetaTrader 4, in case you don't know, it's the most popular trading platform in the world amongst Forex traders. And it's free. You just type in MetaTrader into Google and you find the site. You can download it, and any decent broker will allow you to use this software to interface with their back end. So I strongly recommend that you check it out straight after this video. It is going back to the Forex robots. A Forex robot is a model that's been built using MT4, MetaTrader 4 language, and then people sell these, and you can buy them, and you plug it straight into your MetaTrader 4, and it will auto trade for you. It will place all your trades, and it's supposed to make you thousands of dollars a day. The truth is that none of them do this at all. What you're getting is you're getting a model that, if you're lucky, you might be able to tweak a little bit, but it was only designed for one specific set of conditions, and things change very quickly in Forex trading, and then these things just don't work after that. Or even worse, it was never profitable at all, and all the guy did was just run it on 3 years worth of backtest data, on historical data, until they got some good results, tweaked it a little bit until they got the best results, copy and paste a screenshot, put that on his sales page, tons of people buy it. So stay clear of bots. You know, it's not even like a bot will have any educational value, because the code is protected. You cannot see the guy's model, you cannot see his logic or anything like that. So stay away from them unless you can download them for free, in which case have a look at them. But you know, do not start paying $67 or anything like that. You can actually, with these bots, you can actually buy them, and depending on who you buy them from, because they do have a guarantee on there. You know, if you're not satisfied, you can get a refund. So that's something you may want to consider if you still don't believe me and you still think that they're profitable. At least you're protected. So that is bots. I mean, what else would you want to know if you were just starting out forex trading? Let me tell you that here are a few pointers that even if you're trading now with a demo account, or even if you're trading now on low money, on zero margin or low margin, and just spending a few bucks here and there, these tips will help you, and they'll help anyone. They'll even help a so-called advanced forex trader who's still making some basic mistakes. But here are a few tips that every trader should obey, and they're quite critical. And some people can spend thousands of dollars trying to get the self-discipline that they need to do this. But one tip is you should only ever trade if there's an opportunity there. Sometimes, especially when a currency pair is trading in a range like that, and it's not going up or down. It's going up and down, but just in a range. It's not breaking out. Well, sometimes if that's happening, then unless you're purposely trading on the different swings in direction and trying to get the top and the bottom, unless you're specifically trying to do that, then don't trade, because you should never trade unless there's an opportunity that you recognize that you can take advantage of. If there's no opportunity, which for most people, if it's stuck in a range, there isn't an opportunity, as I said, then don't trade. If there's no opportunity, don't trade. You cannot make one. You cannot just, because you want to make more money, you cannot therefore think, right, I'm going to make more money now. You can't do that. You have to wait for an opportunity to come. And as you learn more about Forex, then you'll learn to recognize those. But just know that there aren't always opportunities. It's quite often that there are no opportunities. So just be prepared for that. Always have a reason to trade. That links in with the last thing that I mentioned, but with having an opportunity. But when I say always have a reason to trade, what I mean is you may identify an opportunity, and then you're going to trade, but how big your position is, and the timing of your trade, you have to have good logical reasons for this. If it's just based on gut because you think it looks kind of good, then beware, because like I said before, gut is notoriously inaccurate. So I don't recommend it. But always have a good logical decision. Here's another thing. Every time you make a trade, right, you need two other things. So many traders forget these two basic things. You need to have a stop loss for every trade that you open. Then that's not just in case you go to the toilet and you forget, and the market goes against you, and you can luckily get out in time. It's not just to save you when you're away from your desk, but it's more about using logic to make your trading decisions. So if you make a trade and you don't even know what level your stop loss should be at, then it's sort of saying, like, you're walking into uncharted territory here, and you don't really know what you're doing. If you did know what you were doing, then you would know an appropriate stop loss level to put there, even if it's a fairly standard one, like 4% or something like that. But the whole point is that you should have your logic should dictate. Here's an opportunity. Here's a position going long or short that I'm going to put in, and because I think it's going to go this way, then therefore I'm going to put my stop loss here, so that it's not too close. It's not too close. It's not too far out. It's appropriate for the situation. And the third thing you need as well is your profit target. So you put on your trade, you set your stop loss just in case, but you should also have an idea of where it's going to finish. Obviously, you can't predict where the chart is going 5 years from now, but according to your logic, you should have some degree of confidence that it will go for I don't know, let's say 20, 30 pips up in, in whatever time span. You should have some idea of where it's going to be. We call that a profit target. And at that point, you reevaluate. So if it reaches that point, doesn't mean you close your position. By then, you might have a better idea, or by then you might decide to try and ride your profits even further. In which case, you should move the stop closer to the profit target, so that you don't, in case it does go against you, you don't lose everything. You don't lose what you've already profited from. But you do need those three things, and that's also what any good signals provider provides. Although you're just beginning now, I don't recommend going with signals. If you rely on signals, you learn nothing about Forex. If you get an education, then you don't need signals. You make your own decisions. You make your own signals effectively. So, but what I'm saying is, every trade should have those three things. You know where you're going in, you know where you're hopefully going out, and you know what your backup plan is. So, I hope you found this video informative. Excuse me for my hangover. I hope you still understood me loud and clear. Please check out my other videos and hit the subscribe button, because if you do that, you'll be able to see my other videos when I release them. And before I go, if you could please check out the link below. I put it in the description box. There is it's an excellent guide written by a South African guy called Dirk de Toy, and I really recommend checking that out if you are serious about your Forex trading. If you want to rely on bots, then really his book is not going to interest you. But if you are serious and you really want to make something of this, and you see it as a legitimate second income stream and possibly a primary income stream eventually for you and making a living and providing for yourself and your family, etc., then I do recommend having a look at that. Also, if you have any questions, then please leave them below. I'm happy to do a video response. If you have questions about that book, for instance, the one I indicated below, then by all means, just fire away and let me know. So I'll see you soon in another video. Until then, take care.